Hello everyone, it is the Canadian Futures Trader here. It is January the 28th, 2021, and I wanted to put together a video all about LeeLoo Trading for several reasons. Just up front, I already know this video is going to be super long. I've actually already recorded it once, and I felt like if anything, I just made it slightly more confusing than it needed to be, so I'm going to try to redo this now. I will put timestamps on the video, so if you look down below and want to learn a specific thing, you want to learn about their withdrawal process, the funded account options, etc., you can jump to those, so it might make it a little bit easier on you. I'm going to try to make this as clear as possible, but I'll be quite honest. There's a few things about LeeLoo that are confusing to explain, or at least I have a hard time explaining them. So I definitely encourage you to go to their site and read more about them and the different evaluations they have, how the funded accounts work, and most importantly, their trailing drawdown and how that works. That's kind of one thing that stands out about them versus other companies. As well, I encourage you to read it. If you're watching this video in the future, whether it's a month from now or 5 years from now, these evaluations, they might change, the rules might change, etc. So you definitely want to check it out and make sure that, what I'm saying in this video still applies. It may not, maybe things change for the better or for the worse. So up front, I'm going to try to just kind of summarize everything really quick, and then I'll dig into the more specifics. So to give you a quick bit of background, if you're not familiar with me, I started this channel in December 2020. I was going through the OneUp Trader and TopStep Trader evaluations. I want to document the process. I passed both of them. I got funded with both of them. As of today, I blew up my TopStep funded account within 3 days. There's a video about that. I'm still trading my OneUp funded account, and I'm taking it very slowly and cautiously. So there you go. That's where I'm at now. I have traded LeeLoo before in 2020. I did not succeed. I will cover kind of like the tricky things about it. I will say there's definitely, LeeLoo stands out because there's some things that make it a much better option than some of the other options. When I speak about the other options, I'm referring to TopStep, OneUp, and Earn to Trade. Those are the other three kind of big names, I would say, in the industry, and they're the other three that I've done at least once or traded with, so I can speak to them. I've experienced them. So, like I said, there's some things that stand out about LeeLoo that are actually positives, and then there's some things that stand out that are negative. So it's up to you to decide if the offset of the positives and negatives makes it worth trying, or if you'd rather just stick with one of the other ones that's a little bit more out there and there's a little bit more information about it. So let's get started. So this is LeeLoo's homepage. Also, I just want to mention really quick, as I go through this presentation, I'm going to point out the things that I consider pros and cons about them. And this is all relative to those other companies. And, whether I say TopStep or OneUp or whoever, it's just kind of compared to them as a whole. So I'll point those out. And then at the end of the presentation, I'm going to summarize the pros and the cons and whatnot. I will say up front too, I don't have a problem with it. You're not going to get an answer of like, is LeeLoo the best or is LeeLoo the worst? I think they're very viable. I am going to start the LeeLoo Express again. I trust in them enough that if you pass, you're good to go. So if you're looking for a video about, LeeLoo's a scam or anything like that, this is not that video. At the same time, I'm not going to trumpet them. I'm not saying they're the best out there. I would seriously consider them kind of like a backup one, a trading program or a secondary one. And that's very much how I'm treating it. I have my OneUp funded account. I'm going to go through LeeLoo as kind of like my next project, if you will. So there you go. So let's get to this, guys. So this is their website. They did just recently update this. This used to have a picture of a guy on it was either a yacht or speedboat. I don't remember. Updated it to make it a little bit more professional. So there you go. If you scroll down, you can see their various trading options. Now, we'll get back to this one because this is what I'm mainly going to be focused on. Everything else is very similar to what you're used to with OneUp, TopStep, etc. They have different names, but they're basically, for example, 100K, 150K, and the specs are similar. So, for example, with OneUp, I'll use OneUp as a reference quite a bit just because that's one of the ones that I watch you guys through in my other videos, and I can directly compare it. So 100K account, up to 12 contracts, 6,000 profit, 3,000 trailing drawdown. Exactly the same. Where they differ, and this is the first kind of pro with LeeLoo, if you will, is their pricing. It's $220 a month. With OneUp, I paid $300 a month. With TopStep, I don't quite remember what this option costs. I know for a fact, though, that TopStep's 150K account costs $345 a month currently. So again, LeeLoo is cheaper on that front. Now, I've never done any of these. Now, and what they don't mention here on the little summary is it's also like 15 days, etc. One step, so it's very similar to OneUp's process, except it's a little bit cheaper. What we'll get back to now is they have this LeeLoo Express. What it is it's 100K. There's no different account size options. It's a 100K account. You get 12 contracts, 6,000 profit target, 3,000 drawdown, exact same as the 100K kind of regular combine, if you will. It's only $77. You might think, well, what's the difference here? And we'll go through all the specs, but to give you the quick summary, it's only 10 days, but you have no more time. You have to finish in 10 days. So whereas with any other combine, it's like you have to trade a minimum of 15 days, but if it takes you 20, that's fine. This is 10 days and only 10 days. So basically, if you can prove you can reach this goal in 10 days, then you will get funded. It's a little bit cheaper. There's no resets or anything because, I mean, the price is already cheap. So if you blow it, basically you would just sign up and try it again. Now, it says 14 days here. They're accounting for weekends. So if you get into the details and read all about it, it's 10 trading days is what you have to do. So let's take a look at the LeeLoo Express, and this is the one that I'll be documenting. I'm really not interested in another sort of longer combine. This is what interests me. There's nothing like this currently out there that I'm aware of with any of the other big three, if you will. So if you click on that, you come to this, you can log in. I haven't logged in. They give you kind of the details here. $77 US, you get 14 days, 10 trading days. Your first day begins the hour of purchase. Etc. They get you set up pretty quick, but you want to be careful. If it's like, an hour before the market closes, you might not get in that day. So it wouldn't necessarily count, but let's say they did set up your account right as the market was closing. Well, that's going to count as one of your days, but you're really not going to get the opportunity to trade. So just be careful about when you sign up. I would recommend maybe just sign up in that in-between couple hours. For me, I'm on the West Coast, so that's between 1 and 3 p.m. And then the next day would be my actual technical first day. So let's look at the facts for this now. It gives a little bit more detail, but basically, just in summary, before we look at it, it's the same as the other combines and evaluations in terms of the products that you can trade, the times you're allowed to trade, your connection will be through Rhythmic, etc. They give you a free license to NinjaTrader you can use as well. So all of that is pretty much the same as any other combine/evaluation you're used to. The biggest difference is there's no scaling. It's just you get 12 contracts right out of the gate, and you have to finish in 10 days. The trailing drawdown, which we're going to focus on a little bit later, is probably the biggest kind of hurdle with this, honestly. It makes it slightly difficult, and I have a war story about that as well. So looking at their facts, I will say, and this is another pro for them, they have a very extensive facts. It really explains things very well. Again, as I mentioned at the beginning of the video, there is a few things that get somewhat complicated on both their performance accounts. So when I say performance accounts, that's their funded accounts. They actually have two options, and each option is kind of quirky, so that's where it gets a little confusing. We will go through those. But their facts is fairly detailed. Just be sure you read through it. And like I mentioned, they might change rules over time, so you definitely want to revisit these. The LeeLoo Express promo, I kind of already covered it. One other benefit I forgot to mention, they actually refund you your fees. So you pay the $77. If you pass, you get your $77 back. No other company does that. So that is actually definitely a benefit to this as well. We already covered the parameters, 12 contracts, 6K target, 3K drawdown, explained. We're going to get to that. Your products are the same as you're used to. If you don't pass, if you make it, basically what they're covering here, I'm just going to summarize. If you don't pass, you get to day 10, you haven't reached the $6,000 goal. Let's just say you're at 4,000. You weren't quite able to get it together. You can actually apply then to go into one of those 15-day combines and kind of roll yourself forward and pay the difference. I believe that's how this works. I honestly haven't done that in the past, and I either just didn't pass or wasn't in. And if you blow it, basically you can reset it. There's, well, I shouldn't say reset it. You just pay and take it again. There's no real resets to this. Be careful of holidays. That is one other thing I haven't mentioned yet. I mean, a holiday, oftentimes there's abbreviated trading hours. It's still going to count as a trading day. That 14-day time clock is still on. So without thinking through in a specific example, but if, there's a few weekends in there and a holiday, you might not be able to finish in 10 trading days. So be careful of holidays. Think that ahead. You can buy an extra day, but really you should just think ahead and not trade into those. So guys, once you sign up, you're aware of the rules. I'm just going to kind of try to go through this in the natural progression. You would trade for 10 days. You're set up with Rhythmic. you can track your progress in Rhythmic. Now, one of the negatives I'm going to mention is there is no extracurricular stuff with LeeLoo. There's no flash, there's no graphs, there's no stats. All that stuff that you maybe saw in my videos with TopStep, you get your daily graph and your win-loss rate and all this stuff. You get the little check marks next to the things you have to accomplish. OneUp, same thing. You get all those stats. You get the graph. It shows you where you're at. You get the progress bar. None of that with LeeLoo. LeeLoo, the biggest way I can summarize LeeLoo is it is much cheaper, but you don't get all the extra fluff that you get with like a TopStep and a OneUp. There's no trading communities, like OneUp has their own kind of version of Facebook, if you will, right on their site. So once you're in a evaluation, you can network with the other traders and post up pictures, all that stuff. LeeLoo has none of that. It's very much, here's an account, go trade it. If you pass, congrats, you're getting a funded account. And that is it. And for that, it's cheaper. One thing I want to mention, going along with that theme, is once you pass, you need to email them and tell them you passed. You also need to, now, I'm going to say this with a caveat. In the past, you had to email them a screenshot of Rhythmic showing your balance. You had to write out each of the 10 trading days, say, okay, here's the 10 days that I traded. They needed to verify those 10 days. Like, it very much felt kind of a little bit just odd that you had to tell them. Like, they had no way on their side to verify it. You had to send them screenshots of everything so they could verify it. I'm almost certain that I saw an email within the last month saying that that's been changed and it's for the better. Now they can, when you pass, you still have to email them and say, hey, I passed, but they're able to verify it on their side, which is much more professional, I would say. Their site still reflects that you need to send in the trading dates, you need to send a screenshot of your balance. Just know that that's what you have to do. Don't cancel your account yet. Once they verify it, then they'll start the process to move you into a funded account as well. Then you can, from what I've read, you still have to send them a separate email saying, hey, can I have a refund? I passed, which is a little weird to me. I feel like they should just automatically do that. But nonetheless, it's their world. We're trading by their rules and playing with their accounts. So I will say, I'm just going to throw this in here as well. I did a lot of research. Like, I was very, very, very skeptical of LeeLoo all along. Even after having done it, I was like, but I failed. And I was like, do I really want to try this again? Like, I don't even know that if I passed, I would get funded. I was able to dig around quite a bit. I have been able to find funded traders. They were able to do withdrawals. So, I mean, yes, you could make the argument, well, maybe they're just shills. They put up fake results. Again, I'm a very skeptical type of person. I really dug in and I didn't get the impression that these people were shills. They have other content that very much leads me to that they've been trading for a long time. It's not like some new account that somebody created and they have like one video showing a withdrawal on LeeLoo. It's not like that. These are people who I would say I trust. So I do believe, if your argument, or if you're curious, if you think like they're legitimate, I do think they're legitimate. I do think there's just some weird things about it. So next, so let's say you pass, you send in your information like you need to. They send you whatever email saying congrats, here's your login for your funded account. One thing you have to do is you have to choose now, and it says right here, choose a performance account option. Now, performance account, funded account, same thing. They have two options, the accelerator and the investor. So I'll just say up front, if I was to pass, I would personally go with the accelerator. It makes much more sense to me for a few reasons. I'm going to try to summarize these now. This is one of the things that gets slightly confusing. So before I get into that, once you pass, you no longer pay a monthly fee. I think that's pretty standard with everybody. For data, your first month is free, and then after that, it's $88 a month, which is cheaper than a TopStep. I think TopStep charges you $130 a month. I could be slightly wrong on that. OneUp, though, doesn't charge you anything. So charging $88 is kind of in the middle. I'm pretty sure Earn to Trade, last I knew, they also trade, they charge you every single month. I don't remember the amount. It's been a while since I've been with Earn to Trade. There's a few reasons for that, which I will at some point make an Earn to Trade video. But nonetheless, so this is kind of I don't know if it's a pro or con, it's just kind of in the middle, I would say. But so just to kind of quickly summarize, you do get your $77 back, you're going to get your first month of data free, and then you're paying $88 a month. I think that's all fairly fair. For a funded account, I think that's all right. So let's get into these. So I'm going to try to do this and just explain it in layman's terms as I can best kind of verbalize how these work. If you choose the accelerator account, you do have to scale in. You start with 2 contracts and you work your way up to 12 contracts. And there's different goals. Like when you reach, X amount of profit, you can now trade 4 contracts, etc. That's how it works, and that's fairly standard. You do have the option, and this is another pro of LeeLoo. Once you get to the 12 contracts, you have to stay there for 2 months, but after a 2-month period, you can ask to be bumped up even further. So even though you qualified with 12 contracts, you could ask to be moved up the ranks, and they will take a look at your account and see if they are willing to do so. So I think that's a pro, and that's only available with the accelerator, not the investor. So that's one of the reasons I like this, is you can, you scale in, but you have the ability in the future to scale up even further and grow. It has a static drawdown when you start, so it's fairly conservative. It's $625. So you start with a 100K account, but you only have a $625 buffer. Once you get up and above 100,000, I believe their first step, they kind of have a 2-step process. Once you reach your first $2,000, your drawdown jumps to the 100,000 plus 100, so 100,100. But so once that number jumps up to 100,100, it stops there and it never trails. Now this is important. We're going to get to this trailing balance. I mentioned it a few times. We need to devote a little bit of time explaining it because it is on the tougher side. So if you can make it through the evaluation, the fact that the funded account doesn't trail is very important, and it's actually, I don't know if that's necessarily a pro, but it makes it a little bit more forgiving. So this is one of, I don't know if I want to call it a negative. It's something to know. You aren't able to withdraw any money if you choose this option until 30 calendar days. So you have to trade for 30 calendar days before you're able to do a withdrawal. There is no minimum or maximum. So some of these pros and cons are actually going to be differences between these two accounts. So, it's like we're comparing this to other trading companies and within itself, the two options you have. The 30 days thing used to bother me, although now that I've been funded with OneUp and I'm 2 weeks in and I've only, made sort of, a nominal amount, having a 1 month kind of holdout isn't a big deal, I would say. Like I really, I thought, I'd be able to jump in and make a bunch of money and do a withdrawal within a week or two. And it's not the case. So having a 30 days before you're able to withdraw isn't as big of an option or a big issue. I'll also mention, so no minimum or maximum withdrawal limits. That is good. And it's good relative to the investor account where there is maximum withdrawal limits and they're fairly, tight, I would say. We'll get to those. It's really what turns me off about this option. As far as the profit split, it's very standard, 80-20. You keep your first 8,000, then it's 80-20 after that. I would say that's very standard. One thing that I guess I would chalk up as a pro is if you did stay with them, after your first year, that goes up to 90%. That's pretty good. So it's an incentive to actually stay with them and trade through them. Okay, guys, so that's the accelerator in a nutshell. You have to scale in. There's a static drawdown. You have 30 days before you're able to do your first withdrawal. There's no minimum or maximum withdrawal limits, though, and the profit split. The profit split is the same between the two options. The investor account. Honestly, I'm having a hard time understanding who would choose this option if you really think it through. So let's just go through it. So one of the, I guess it's a benefit, but I'm really actually, I don't know that it's a benefit. It's just something. I'll tell you. Basically, starting day one, you start with your max contract. So you traded 12 contracts in the LeeLoo Express. You get 12 contracts right out of the gate. Now, on the surface, that seems like a benefit. Like, okay, good. Like, yeah, I should get the full contracts. One kind of negative of this compared to this is no additional contracts can be added. Basically, you qualified with 12. You get 12, you'll never trade more than 12 unless you want to do a different evaluation. So I would say that's fairly standard. Like that's comparable to the other companies, but it's a negative relative to this accelerator option. So this one, you begin with a trailing drawdown, and I believe it's 3,000. So it's much more forgiving. So the trailing drawdown is far less strict with this one, but also remember you're cut loose with 12 contracts. Here you only have 2. Limits on min-max withdrawals on the first 4 payouts. Big issue. This is kind of one thing that definitely makes me wonder why people would choose the investor account. And it kind of negates the fact that you have 12 contracts right away. Like to me, having 12 contracts, the purpose of that would be to try and make more money. Obviously, I can trade with 12 instead of 2. But you're going to be severely limited, and I'll show you the chart on what your withdrawals can be. So for like a third of a year, you're pretty much handcuffed on your withdrawals, and they are very tight. So that's why I say getting the max 12 contracts really is negated by this, because you're going to be handcuffed for 4 months. Whereas here, you can scale yourself up and you can withdraw. There's no maximum amount. You could probably get to the point where you're trading 12 contracts with this within a month or two, and then you can withdraw your profits. So keep that in mind. And then profit splits, exact same as up here. So those are your two options. As I mentioned, I would 100% choose the accelerator option. So looking more in depth, believe it or not, at the accelerator account. So it has a two-phase approach. Doesn't really bother me. Step one is you get your two contracts. Sorry, it's not highlighting. You get your two contracts. Your profit goal is 2,000. You start with 100,000. Your static max loss is 625. Your minimum account balance then is 99,375. So, I mean, they have an example here. Your max drawdown is 625, but it's static. It doesn't trail. So you earned 150 in profit. Now you have a cushion of 625 plus 150. Once you reach the 2,000 profit goal, you contact them. They move you into phase two. So this is very tight, but it doesn't trail. So good and bad, right? If you're able to kind of creep away from this, now you're only trading two contracts. So hopefully, you can get yourself up to 2,000. And this won't be an issue. Once you reach that 2,000, you move into phase two, and this is the final phase. Now, keep in mind, this is a funded account, so that 2,000 is part of your funded, balance. You could, in theory, if you met all the other goals, the 30 days, etc., you could actually withdraw it. Your minimum account balance, so your 2,000 profit is moved into, you keep that account. So now you have 100 and $2,000. Your minimum balance is increased to $100,100, but it stays the same. It doesn't trail. It says right here, your max loss minimum account balance is 100, will never change. So they give the extreme example of you grow your balance to 165,000. You would need to lose 64,900 before you blew your account. So basically, whatever buffer you want to create, that is up to you. And in some ways, I think that's a pro, right? Because thinking of OneUp, one of the rules with the funded account is the first 3,500 you can't withdraw. So they're basically forcing you to have a cushion. Whereas here they're saying, hey, you can have as much cushion as you want. We're not going to trail you, none of that. So I would say it's a pro. It's not necessarily a bad thing. Here's the scaling plan. So this is after. So you trade the two contracts to get to 2,000. Now you're going to trade two contracts, I'm assuming, until you get to 3,500. And you get then three contracts, so profit threshold to unlock, etc., all the way up to 10,000. So once you reach 10,000, they cut you loose on the 12 contracts. Fairly, I don't know. I would say this is on the conservative side relative to some of the other programs. I believe OneUp, it's once you reach, I want to say 4,500 or 5,000, you get cut loose on 12 contracts. So they definitely slow you down here. Good or bad, I don't know. Honestly, I'm not 100% sure that's a bad thing. One thing I mentioned earlier is if you reach your 12 contracts, you can stay here for 60 days, but at that point, you can request to be increased if you want, and they will check that out. Swing trading, I don't do swing trading, so I don't really read into this stuff. You're allowed to hold some stuff overnight. Read that if you're into swing trading. I am not, so I don't really care. In terms of withdrawals, so read about the trading platforms. They give you NinjaTrader for free and you can continue to use it. So that's nice of them. I have my own version of NinjaTrader. I have Jigsaw Day Trader. So I don't get too hung up on the trading platforms because I've already invested in my own. So read about those if that's important to you. Commissions, I don't usually care. It's just, I know they charge similar commissions to everybody else. Okay, guys, let's talk about the payouts for the accelerator account. Payouts for both types of accounts are paid out on Tuesday or Wednesday, the last week of the month. Don't love this, just that there's only a once a week payday. It's not the end of the world, but relative to other trading companies where you can request to withdraw anytime, it's a little bit of a downside. For example, OneUp, they only process withdrawals once a week, but still it's once a week, not once a month. So payouts are free, so that's a little bit of a bonus. I'll put that in the pro column, and again, I'll go over all the pros and cons at the very end of the video. Other companies, again, I'll speak for OneUp, they charge, I want to say $45 for a wire transfer, so it's not a big fee, but still the fact that this one is free. So I'll mention this, some people really key in on PayPal. PayPal is limited though, and it's up to $2,000 a month, so you can't get a lot of money through PayPal. So if you're doing smaller withdrawals, sure, get it through PayPal, but they really encourage you to get a wire transfer or paper check. I don't know who collects paper checks anymore, but you could. Wire transfer is probably the best way to go about it. With the accelerator account, there's no minimum or maximum restrictions once you get past the first 30 calendar days. So bit of that first hurdle. Again, I don't mind the 30-day thing too much. It used to bother me a little bit more, but now I'm like, whatever. The last day of the month, or sorry, I shouldn't say last day of the month. The withdrawal is only once a month in the last week of the month. Again, but we already touched on that. You can read all of this. They go through specific examples regarding the withdrawal amounts and stuff. Like obviously, if you only have 102,000 in your account, they're not going to let you withdraw more than you have available. You have to keep that minimum, threshold, if you will. So, best to build up a balance. And then payout implications, you can read this. It's similar to all the other companies. You're treated as a 1099 contractor. Essentially, you're not actually an employee of the company. I think pretty much all the trading companies are like this. So that is the accelerator account. Let's touch on the investor account. Again, I don't think this is as smart of an option. I feel like the way it's kind of sold is like, hey, you can trade your full clip, 12 contracts right away. Oh, but guess what? You're not going to be able to withdraw hardly any money for 4 months. So there's not too much benefit to having 12 contracts right away. So this one doesn't have 2 steps. The accelerator had, make your first 2,000, then you move on to step 2. This one is just 1 step. Basically, you're in a paid account, you get 12 contracts. Your max trailing drawdown is 3,000. The way it works, I believe, is the same, and it is. I mean, again, you can read through all this, but basically your drawdown stops at your IB, which is initial balance, plus $100. So $100,000 and $100, your drawdown stops. You can make as much as you want. Now, let's get to payouts. Your first payout can't be requested until you have 30 individual trading days. That's the difference. And that's why they do have it bolded and in caps. The accelerator option, it's 30 calendar days, 1 month. Individual trading days, so you're looking at closer to a month and a half, not quite, but let's just call it a month and a half to make it easy. So a little bit longer before you can withdraw your first payout. Again, maybe you say, okay, not a big deal. Well, what bothers me is then the payouts are limited. So it's the same thing Tuesday or Wednesday last week of the month. So payout, let's look at this. So here's the headers, and we're going to focus on this 12 contract account just to keep it consistent here. So your first withdrawal, you can do after 30 active trading days, so a month and a half, you get 12 contracts. Your required balance is 103,100 before you can do a withdrawal. And your minimum withdrawal amount is 1,000. Now, just to flash back to the accelerator account, there's no minimum or maximum withdrawal amounts. You could withdraw $200 if you want from the accelerator account. This is the number that really bothers me. Your maximum withdrawal on your first and second, third, fourth withdrawals is $1,750. To me, that does not sound like a lot of money relative to trading 12 contracts. So to put it in perspective, you're required to trade 10 days and make $6,000 in the sim in the evaluation using 12 contracts. And if you reach that goal, you're going to be funded. So in theory, you have the ability to make $6,000 every 2 weeks, $1,200 a month, or $12,000 a month, sorry. I mean, again, this is trading. It could go any way. You might lose a bunch of money. But the fact that they limit you to $1,750 a month, like this just doesn't seem fair to me. So you're going to drag on for 4 months. And remember, your first withdrawal isn't until after a month and a half, and then the next 3 are 1 month increments after that. So you're looking at 4.5 months, and really it would be the 5.5 month mark before you could do a normal withdrawal, let's call it, where you could withdraw as much as you like. So this bothers me. It bothers me just because, say you did build up a decent balance. Let's say you had, after your first month of trading, you had $15,000 of profit. Personally, I would want to be able to withdraw some of that. So if I'm limited to $1,750 and know full well I'm not going to be able to withdraw any more than $1,750 for the next 3 months, I mean, if anything, that's kind of discourages me from trading. Now, you might make the argument, well, no, because after month 4, starting month 5, you can withdraw as much as you want. So if you made 20 grand a month for, 5 months straight, you'll get this huge payday like down the road. Fair enough. If that appeals to you, that's great. To me, I don't love the idea of banking on leaving all this money in this account that I can withdraw 5 months from now. I mean, just doesn't sit right with me, I guess. So I'm going to leave it at that. I'll let you make your own decisions. And they have this for all the different levels. So, I mean, I'm talking specifically again about the LeeLoo Express, which is 10 days, 12 contracts. They have all those other evaluation accounts, so you can see the limits here. So look at this though, like 30 max contract account. That's insane. And you're only able to withdraw $3,000 a month. So I don't know. I have a big problem with that. So that's one of my big problems with LeeLoo is this. This goes in the negative column, like top of the negative column. You can read through the whole thing, swing trading rules. The rest is pretty much the same. One pro, I can't remember if I mentioned this earlier because we've covered a lot of information. They give you a free license key to NinjaTrader, and you continue using that once you are in a funded account. So you don't have to pay for a platform. That's definitely a pro, because pretty much all the other companies, once you get past the evaluation, you have to buy software. And all the software isn't cheap. I paid $500 for Jigsaw. NinjaTrader, I'm not sure exactly what it costs, but I want to say it's around $1,000. I could be wrong, but it's not cheap. It's not like it's $50 or something. You're gonna have to pay for it. So LeeLoo, you can get it for free. So that is definitely a pro. Commissions, etc., is the same. So let's talk about the next part, which, stay with me. It might be confusing. Hopefully I explain it well. This is the big thing that I think probably busts most people. I know it's what busted me the few times I tried them, is the trailing drawdown. So hopefully as a baseline, you're familiar with the trailing drawdown. I'm just going to use my own numbers. I don't know what numbers they have in here, but I'll explain it. If you have a $100,000 account, usually your trailing drawdown, let's just say it's $3,000. So basically, you start with a $100,000 balance. You're not allowed to go below $97,000, right? Now, as you make money, so let's say your very first trade, and I'm just using an example, not so much this one, but in general. When you make your first trade, you make $1,000, so your balance is now $101,000. Normally, your trailing drawdown would also go up $1,000, so now it's $98,000. So you still have a $3,000 buffer. It's just moved up. Now, if you have a losing trade, that doesn't impact your trailing drawdown. It always stays the same. So if your next trade is a loser of 1,000, you're back to 100,000, but your account is at 98, or your trailing drawdown is at 98,000, right? Typically, this continues to follow you up to your starting balance. So once you make more than 103,000, once you've reached the 103,000, your trailing drawdown comes up to the 100,000 mark and stops there. That's in a normal kind of situation. Now let's talk about LeeLoo. There's actually two aspects to this that make it tough. One, the first one that's easier to understand, that trail does not stop. So once you get to 104,000, your trailing drawdown is still increasing. It's at 101,000, etc. Now that doesn't sound too bad, but remember, not every trade's going to be a winning trade. So you might drag it up to 101,000 and then have a series of losing trades. In any other account, that trailing would have stopped at 100, but with LeeLoo, it would be at 101. Now, to make it even slightly more difficult, this line here, your trailing drawdown never stops trailing. That's what I just talked about. And it's based on the highest, this is the key word, unrealized profit point through your entire valuation. So what this means, let's go back to our example. Let's say that very first trade you're in, you start with a $100,000 account. Your first trade, I like to trade the bonds. I'm in a trade and I'm lucky and the price just shoots up. It moves multiple ticks and to the point where I could have got out of the trade at a $2,500 profit, but it happened so quick. It shot up however many ticks that is, and then it came back down and I got out of the trade for $1,500 profit. And I'm thinking, great, I got $1,500 profit off that. Sure, it touched a peak where I could have gotten $2,500, but I got $1,500. Well, the trailing drawdown is based on unrealized profit. Your trailing drawdown got dragged up all the way by that $2,500 peak where you could have gotten out. This really burns people who trade very volatile products, because if the price is moving up and then coming back down and you're not capturing every bit of profit, this will burn you. So again, just to go back to that example, if your initial trade shot up to 2,500, your drawdown got pulled all the way up to 99,500, 3,000 below that. Then your the amount price came down, I said, and you captured 1,500 of profit. Well, you're 1,500 above the starting point, but remember your drawdown was dragged up 2,500. So you've lost 1,000 of cushion essentially. Do that a few times and you're gonna bust. I can speak to this one specifically a few months ago, and this is where I got very frustrated with LeeLoo. I will say though, knowing the rules, you kind of have to work around the rules. I encourage one way to prevent this is to set a take profit. So in my example there, maybe set a take profit at $2,000 or something. So if you did get this erratic movement up, you would capture it and you would just be out of your trade and you would grab that profit. What happened to me was I was trading NQ. It was my very first trade of the like I had just started the evaluation. NQ was moving very slowly. It was the evening time. It was ranging in a very narrow range. I went, let's just say, I can't remember specifically, but I went long. I just wanted to scrape a few ticks. the price did one of those erratic, just it skyrocketed and then came right back down. It dragged my stop loss basically to a point where I had no more room to, I don't remember the exact number, but basically it dragged it within like a few $100s. I don't even think, I think it was like $200 of where I was at. So just that one erratic move, the price shot up, let's just say it shot up $2,800 and then came right back down. My stop loss is now $200 below the price that I'm, where my account balance is. And I had no time to get out of that trade. Like it shot up and came right back down. Now, if I had set a take profit, yes, I would have prevented that. But guess what? I didn't, and I blew that account because I basically had next to no buffer anymore. So, and that was the very first trade on it, and then I quickly blew it. So this rule can burn you again in volatile products where you get a lot of movements up and down. Your stop loss is just going to get dragged up and up and up. Now, also remember, so unlike some of the others, like with TopStep, I'll compare this to TopStep. You have a nice little dashboard. If you're using TopStep Trader, it shows you exactly where you're at on your day, how close you are to your stop loss, etc. You don't get that with LeeLoo. Remember what I talked about? There's no frills. You need to keep an eye on that in Rhythmic. But that said, I mean, if you're in the middle of a trade, maybe you have Rhythmic up. Just be very careful of this. So hopefully that makes sense. If it doesn't, go and read this. I'm going to put links to all these things that I've talked about down below in the description. So if you quickly want to revisit this, they show you here how you can track it in Rhythmic. I mean, I'm not going to go through all their graphs, but they show you, they explain it more in depth. They explain it a few different ways. It definitely confuses people. I've seen multiple people ask about this and then somebody explains it and they still don't get it. Hopefully my explanation kind of worked for you. I know sometimes it's hard unless you actually almost see it in action or see it in a graph, which they don't have, but it's a good idea to watch this. Now for myself, luckily, because I trade the bonds, usually I'm not subject to these spikes anymore. I mean, that example I just gave, I was trading NQ. I really don't touch on NQ anymore. Trading the bonds, and especially trading the 30-year bond, I mean, you're lucky if it moves 3 ticks sporadically, and that's probably pretty rare. And typically now I have a take profit. If it's moving 3 ticks, I want all 3 ticks because that's a big move in the bonds. So it doesn't burn me, but if you trade one of those volatile products, 100% can burn you. So come read this. I mean, and again, this is only in the evaluation phase. Once you get past the evaluation phase, it actually gets dramatically much more easy. They talk about that here. How does this work in the performance account? You don't get that. It stops at the 100,000, or I think it's 100,001, whatever it is. And then in the accelerator account right here, and then in the investor account, it goes all the way up to 103, but it stops there. Let me see here. Oh, no, sorry. I take that back. It's also $100,100. They're just making an example that once your account passes 103, 100, you've effectively, shook off that trailing drawdown. So hopefully that makes sense. Check out the link below to read more about this. Okay, guys, so to summarize this, I put a point. I think I've captured all the good, the bad, and a few additional points here. Let's just read through them really quickly. So the good sides of LeeLoo, it's a cheaper price. It's much more affordable for people to get into, especially that LeeLoo Express. $77 for a 12 contract account, drastically cheaper than, say, OneUp, a TopStep, you're paying $300, $350 a month. Much cheaper. You get 2 performance accounts, again, performance account / funded account options. I guess this is a good thing. You do get a choice. Like, I don't like that investor account, obviously, but you do get a choice. Maybe that works for some people. They want that discipline where they can build up a balance for 4 or 5 months and then get like a huge payday down the road when they withdraw. So no harm. If that's your choice, you get a choice. There's no real requirements after you're funded. So they do mention, if you get into the details there, in order to do a withdrawal, you need to have traded at least 10 of the 30 previous days. I don't feel like that's too bad. Some of the other accounts they have, like with OneUp, for example, you need to trade at least at 50% volume of what you did in the evaluation. So if you traded a lot in the evaluation, well, you need to kind of match that at least up to 50%. During your funded account. So LeeLoo's a little bit easier on that. I don't feel like that's a big deal. 10 days versus 15. So this is the LeeLoo Express. Again, I'm speaking specifically about the LeeLoo Express. 10 days to me is much more manageable because I feel like what happens with everybody is you do 2 things. You either bust your account because you're too aggressive, and this is just speaking in general, or you reach the goal and then you just kill time. So for example, if you followed me along on my OneUp adventure. It's 15 days, but I passed by day 11, and then I just killed time. I killed 4 days just doing a trade. They have to recognize that that's what everybody's going to do. But on the flip side, I understand, because if they just said there's no days requirement, then everybody's just trying to hit a home run and pass in 1 day. So I understand. 10 days to me, though, feels a little bit more reasonable. So I put it in the good column. Refund on your fee for the LeeLoo Express, $77. I don't believe, and I'm not 100% sure, that they do this on their other evaluations. You would have to check. I'm pretty sure they don't. So if you pass, you get a refund. Your first month's data is free, and it's $88 after that. I put this in the good column. Again, it's, with OneUp, it's free. With TopStep, it's, I want to say 130. So it's kind of in the middle, but you get a month free. So I kind of have to put that as a good thing. So you're getting a few little perks here, money back. So the ability to scale up beyond 12 contracts. If you choose the Accelerator Performance account, I like this because I feel like it's very reasonable. You work your way up on the scaling plan. You get to 12 contracts. You have to trade at 12 contracts for 2 months. But if you do a good job and you ask them and say, hey, would I be able to trade more contracts? They'll evaluate it. And they, if you did a good job, they'll bump you up. It doesn't prevent you from kind of growing. It's almost like if you had a normal corporate job and you wanted to move up the corporate ladder. That's how I kind of look at this. Like, if you do a good job, you should be promoted. So other companies don't have this. 90% profit split after 1 year, and that's regardless if you choose the accelerator or investor paid accounts. I think this is good too. Other companies, it's 80% indefinitely. I have read if you go like a year with some of the others and you request it, they might give it to you, they might not. With LeeLoo, it's just a given. So if you're staying with them long term, I think that's a pro. And payouts are free, no wire fees. Benefit as well, like I said, most other companies, it's like $45 within the US, and it's actually usually like about $60 international. So there's a lot of little good things here. They aren't huge individually, but they kind of add up. You get your $77 back. You get your first month free on data, and it's a little bit cheaper after that. If you stay with them a year, you're going to get a better split. There's no wire fees, so your once a month payment, you'll save $45 here if you're in the US. So those are kind of the pros as I see it for LeeLoo. Now let's look at the cons. So it's very stripped down. It's no frills. I mentioned this earlier, there's no dashboard. There's no graph showing your progress. There's no metrics, showing your trade performance, none of that. What you're saving on price is where you save also on frills. Now, I personally kind of don't mind this. I don't mind not having it. I mean, it's nice to have that stuff with the other companies, but I don't mind not having it. There's not a lot of proof anyone passes. So again, I was very skeptical of LeeLoo. I'm still not like on board. I'm not like 100% like LeeLoo's the only choice. You should all go with LeeLoo. I think you really have to weigh these pros and cons and decide if they're for you or not. There is not a lot of information out there about people passing. I talked again about this earlier. I really dug in. I did find proof of some people passing and actually withdrawing funds, and that proof did not seem staged in any way or anything like that. The people as well were very, very skeptical. They were able to show that they withdrew money. I guess time will tell. Hopefully in me doing these videos, and when I go through the LeeLoo Express and ideally pass, I will be able to provide proof positive. Again, this is a bad point. It's not necessarily something that costs money or makes the combine or evaluation any tougher. But on the professionalism front, they're just a little bit off. They definitely, like, the no-frill stuff is one thing. I mentioned earlier, their website used to be like a guy on a yacht, like I want to say he was like on a cell phone or drinking champagne or something weird. It was like all the telltale signs of like scammy sites. So I didn't love that. If you want a bit of a laugh, check out their weird YouTube channel. I don't quite know how to describe it. So their owners, just to give you a bit of history, their owners are ranchers in Montana. The parent company is called Natural Trading LLC. When you make your PayPal payment, it will go to Natural Trading LLC. You can look up their information in the online where they're registered. And you can look them up and get more information about them, etc. Basically, my impression is that they are ranchers in Montana that also were traders, are traders, and they created this site. And yeah, their YouTube channel, just look up LeeLoo Trading, and I don't want to get into it. It's just weird, some of the videos. They're kind of like part comedy, part trying to be serious, part trying to sell their company, but not doing a great job at it. Their branding is just all over the place. So if you want to laugh, check out their YouTube channel. this is probably the biggest bad, is the rising trailing drawdown that doesn't stop. So this is during the evaluation. It's what we just talked about towards the tail end of the video. It burned me before. Just use take profit targets. Like, even if it's just some crazy take profit, just like, if I'm in a trade, like, you should have a general idea of what you're looking to get out of it, right? So if I'm in a bond trade, I'm really not expecting for the price to shoot more than 2-3 ticks. So maybe I set a take profit at 5 ticks. So if there was some completely sporadic like spike in price, I would grab that. I would get credit for that profit, and it wouldn't hurt me on the trailing drawdown front. And heaven forbid it shot like 10 ticks. It's not, I shouldn't say it's not uncommon, but I have seen it. I saw it in the Ultra Bond once, where the price literally shot about 15 ticks in one go. And it's because somebody just came in and just like threw out like a market order, and it just ate up all the bids. I forget which way it went, if it ate the bids or offers, but nonetheless, it shot the price, and that would have killed an account in this situation. The withdrawals once a month, the last Tuesday or Wednesday, I don't love it. I do put it in the bad category just because, relative to other trading companies where you can get, again, for example, OneUp, you can get a withdrawal once a week if you want. I believe TopStep is the same. Earn to Trade, they're kind of going through some changes. I don't talk much about them. I'm not a super fan of Earn to Trade currently. But anyways, it goes in the bad column. It's not the end of the world, but it's not the greatest. A few other notes, just to reminders to summarize. There's no specific consistency rules stated in the rules, but they do mention if you meet the goal, and like the profit goal, and trade consistently, you will get a funded account. Now, they don't define what trade consistently means. So my advice to you, and the advice that I follow, is don't try to go and do a TopStep on this, because TopStep has no consistency rules. So I see it all the time where people go in, they just hammer it, they pass on day one, and then they coast the rest of it, whether it's step 1 or step 2. I wouldn't do that here, just because the last thing I want to do is go through, like, hammer it on day 1, reach the goal, coast for 9 days, and then have them go, well, you didn't do anything consistent. You did it in one trade, so we're not going to give you an account, and it's because we have this rule. So, just try to be reasonable with it. I mean, personally, I don't want this video to be too much about my own combine, but I would just shoot to make, try to spread it out over the 10 days, or maybe over 6 or 7 days, and then coast the final few days. I think that's reasonable. The other note is 30 calendar days. I've mentioned this a few times, but 30 calendar days in the accelerator and 30 trading days. Keep that in mind for the investor account before you can withdraw. It's not a negative, it's not a positive, but it's there. Just know that there are limitations. Whereas with any other, like with MES Capital, I know, for example, their limit isn't so much on time, but it's like, hey, you have to make $3,500 first before we allow you to withdraw any money. So in some ways, other companies are limiting you also, but and just to speak to TopStep, if you go with the pro account, you have to make that first $5,000 before you move into a funded account. Same idea. They're kind of like holding you up on when you can withdraw. They're just doing it a different way. They're not doing it based on specific time. They're just doing it based on dollar amounts. So it can't really hold it out as a negative. It's just something to note. So guys, with that is my very long explanation of LeeLoo. These are the key points. Now, I encourage you, go to their website. Again, the information in this video might be outdated by the time you're watching this. I will be doing the LeeLoo Express, so if you want to follow along and see how that goes, if you want to see how payouts work, ideally I pass and I'm able to show that. Those will be in those videos. So, and I create playlists on my YouTube channel, so just go to my playlist wherever tab and select the LeeLoo Express evaluation, and you'll be able to just see those videos. It'll help sort them out from the other videos I make. And that is it, guys. So do I recommend LeeLoo? I think you have to evaluate this stuff for yourself. I'm not saying yes, I'm not saying no. I don't think they're like a scam or they're bad, but I do think they're definitely quirky, and the rules are beneficial in some ways, not beneficial in others. So all that said, I leave it to you whether you should give them a try. The price definitely is attractive, and part of why I even kind of entertain, giving it a go with them, because I kind of write it up to, what, I spent $77. Let's see what we can do with this and see if we can pass. And hey, if we get a funded account out of it and we get our $77 back, I'm all for it. So I'll leave you with that, guys. Leave any questions below, and if I can't answer them, I'll try to point you to the right place on the LeeLoo site to answer them, or just go to their facts. Their facts are pretty thorough, and you can search in there and probably get an answer for whatever it is you're looking for. If you're interested in LeeLoo, there's a link down below, by the way, to sign up. I know they occasionally run deals, so if you click the link below, it should pop up with whatever the current deal is. They don't always, so just keep that in mind. Thanks everybody for watching. I'll see you in the next video.